Investment bankers came up with an irresistible pitch about 6 years ago to entice Latin American companies to list in the U.S. The deep pockets of investors and their familiarity with new economy stocks. With interest rates at historically low levels, Wall Street saw an unprecedented wave of listings from the region from StoneCo Limited that lured Warren Buffett's Berkshire Hathaway Inc. and Alibaba's billionaire founder Jack Ma to peg Seguro Digital, whose business model was similar to Jack Dorsey's Square. Dazzled by astonishing valuations and blockbuster deals, many smaller firms followed. But reality painted a different picture. Trading volumes disappointed. The stocks performed poorly, and many analysts didn't bother covering them, prompting some to refer to them as orphans. In some cases, the shares even traded at a discount to peers listed in regional exchanges. Now, the tide is starting to turn, and Brazilian education company Vitru has announced it's set to delist in the U.S. and move to a local exchange, while other companies revisit their U.S. ambitions. There is no miracle, said Gilson Finkelstein, Chief Executive Officer at Brazil's sole stock exchange operator B3SA. The Dogo years around 2017 were atypical and combined a period of optimism in the U.S. with excessive pessimism in Latin America. He said, in the end, there is a correlation. And when shares fall in Brazil, they also fall abroad. Without a pushing on travel broker, Desmaker.com Corporation. Over a dozen U.S.-listed Latin American companies trade less, plus 2 Corpa Limited, Lead Bios, Moser Arm, and New Jesus saying that it's made than $4 million in shares a day. The underperformance is not much, but it is significant for many companies. On average, Brazilian stocks listed in the U.S. in the past 7 years are down about 39%, and since their debut through September 6, compared with a 35% drop for companies that went public in Brazil between 2020 and 2021, according to data compiled by Bloomberg, Taker & Co. Since the digital bank moved its primary listing to the U.S. last year from Brazil, its average daily trading volume has slumped to $1 million from 82 million reais when Latin American firms decided to list abroad starting around 2017. Interest rates in the U.S. had been close to zero for almost 10 years. Capital markets were booming as tech companies lured global investors seeking better returns. At the same time, Latin America's biggest economy was experiencing a surge in political instability following the impeachment of Brazilian President Dilma Rousseff. But then came the pandemic, followed by inflation and rising rates, and investors flocked to fixed income instruments. Smaller regional companies with little-known brands got forgotten and became the first to be sold by U.S. investors. The lack of liquidity in the U.S. weighs more than it does here, said Cristiano Guimarães, head of global corporate and investment banking at Itaú BBA in São Paulo. As a result, the group of Brazilian companies choosing the U.S. route in the next IPO wave will likely be smaller. According to Roderick Greenlees, global head of investment banking at Itaú BBA, our cosmetics maker Natura & Co. has shelved the plan to switch its primary listing to the New York Stock Exchange. At the same time, Dragonair Investment Group and General Atlantic LLC have proposed a deal to take private education tech firm Arco Platform Limited, which is traded in the U.S. because both funds think current valuations don't reflect firms' real value. For some companies, the U.S. listing still makes a lot of sense. In the case of Inter & Co., the dual-class structure will allow its controlling holder to eventually sell more stock without losing control. JVSSA, the world's largest meat packer that gets most of its revenues outside Brazil, is seeking shareholder approval for a planned direct listing on the NYSE. New Holdings Limited, which held one of the largest initial public offerings in the U.S. in 2021, is covered by over a dozen analysts and trades over $148 million in shares daily over the past year. for companies that are really global firms and get most of their revenues from offshore markets. This discussion has some merit. B3 Finkelstein says you've got to study, all the nuances, and